The Canadian dollar has a nickname. Traders call it the loonie, after the loon bird printed on the Canadian $1 coin. And the currency pair that puts the loonie up against the US dollar is one of the most traded in the entire Forex market. The USDCAD pair tells you how many Canadian dollars it takes to buy $1 US. If the rate is 1.35, $1 US buys $1.35 Canadian cents. Simple enough. But what makes this pair genuinely interesting is what drives it. Canada's economy runs heavily on natural resources, oil in particular. Canada is one of the world's largest oil exporters, which means the Canadian dollar moves with crude prices more than almost any other major currency. When oil rises, the Canadian dollar tends to strengthen, and the USDCAD rate falls. When oil drops, the Canadian dollar typically weakens, and USDCAD climbs. That relationship is the single most important thing to understand about this pair. Beyond oil, two central banks matter here. The US Federal Reserve and the Bank of Canada both set interest rates on a regular schedule. Higher US rates tend to push the dollar up, lifting USDCAD. Higher Canadian rates tend to do the opposite. Economic data from both countries, jobs numbers, inflation, GDP, can also move this pair sharply and quickly. And because the US and Canada are each other's largest trading partners, any friction in trade policy between the two countries shows up in this exchange rate. For timing, USDCAD is most active during the North American session, roughly 1 in the afternoon to 9 in the evening GMT. That's when both markets are open, liquidity is highest, and spreads are tightest. If you're a short-term trader, that window matters. On the technical side, this pair tends to trend well, especially when oil is moving in a clear direction. Moving averages, trend lines, and momentum tools, like the Relative Strength Index, can help you identify where a trend is strong and where it may be losing steam. Combining that technical picture with an awareness of oil prices and upcoming economic events gives you a much clearer view of what the market is doing and why. Risk management is not a secondary concern here. Oil price swings and surprise data releases can move USDCAD fast. Set a stop loss on every trade. Know your position size before you enter. Never risk more than you can afford to lose on a single trade, or at all. If you want to practice without risking real money, a demo account at ZenithFX.com lets you trade USDCAD in live market conditions with no capital at risk.